So let me show you what's really going on here. And what it is it's all about money. Money drives markets. Liquidity drives market, which means that Fed policy drives markets. Now, let's take a look at what's been happening recently. The St. Louis adjusted monetary base is basically under control of the Fed. And as a result, it gives an excellent indication of what's really going on in the mind of the Fed. Everybody looks at the level of interest rates, which is worthwhile to look at. But really, what's more important is the shape of the yield curve and money supply. So notice what happened is that starting in 2015, we were often shrinking the money supply. But notice here lately that the money supply growth, it hasn't gone to positive, but it's far less negative. And that negative money supply growth, that shrinking of the money supply, is one of the big reasons why I never felt this market was going to explode to the upside and have a plus 25% year or a plus 35% year, something like that. Instead, all the conditions have been bullish, but there's been a couple of indicators which have dampened down my enthusiasm, and this is one of them. Now the pressure is being released. Instead of shrinking the money supply, we are still shrinking the money supply, but just by a smidgen. Now I know nobody's telling you they're shrinking the money supply. Everybody's talking about how loose the Fed is. But this is your reality check. And this has a big impact on markets. So let me drive down to how do I interpret this. The pressure's off. This is turning into a bullish factor. If we can get that line above 0, then it would definitely be bullish. We're basically at about break even. We're neither expanding money supply nor contracting it, but we're at an inflection point here, and that's why I'm showing it to you right now. Hey everybody, I'm showing this to you right now because, well, pretty much I have to. All right, now let's get into the market. Look, oh my God, tons of stuff happened last week. First of all, of course, the big thing was the big sharp gap down last Wednesday. The market, and well, let me keep going. So gaps are important. And we had the big gap down. It was on heavy volume. I'll show you that on the next chart. But then on Thursday and Friday, we rallied up. Now, that's no big deal because when you get a big gap down like that, the market normally will rally up into the gap, which it did. The key now is here's when you do gap analysis. If we start to trade above the gap, which would be Tuesday's low, then the gap has been overwhelmed and it's no longer in force, and in fact that would be very bullish. But if we break below Thursday's low, that means that it was a legitimate breakaway gap and that the market is going to continue to move lower. So please take a look at that. Very important what the price action is early in the week. Another bearish factor, I put it in the purple box. Look back in late April. We gapped up and then we just gapped down in the last week. That's called an island reversal, and it's a topping or reversal pattern and suggests that the market is going to move lower. Third bearish feature is, of course, the purple predictor. Notice that as the market made a new high last Monday, the purple predictor was making a lower high. That divergence meant that the market was going to sell off, and it did. So the purple predictor, also a negative feature here. Let's take a look at the Dow Jones. Same thing in the box, so that's nothing new. The DI minus, that's the red line up at the top, it's now much higher than the DI plus, which tells us we're in some type of a bear move. But let's take a look here. The only good news is the NASDAQ. And of course, have I been pounding on this long enough? We still have the same island reversal top. We have the big gap down on heavy volume. The only thing here is the purple predictor is bullish. Unlike the Dow And unlike the S&P, so once again, we need to focus our attention. We could be making money here on the long side of technology stocks, but we got to stay away from those old cyclicals and things related to the economy. Why? Because the market thinks interest rates are going up. We'll dive into bonds in a minute. Okay. Now, seasonality, our seasonality indicator. Look at what happened here. We had the big gap down, just like in the other indices, but the purple predictor took off to the upside. So once again, we want to be in small cap, technology stocks, those types of things. That's where we need to be. We've got a market of stocks, not a stock market. There's a bifurcation going on here that allows us, for fully paid up members, they know we're making a ton of money right now in our stocks, even though the market's going down. All right, seasonality. Look at where we are. We're at the high there. Look at that over there. It's sort of towards the 3/4, 2/3 of the way through May. That's where we are now. I don't care what scenario you're going to pick. This should be a peak in the market, and we should sell off, depending on the scenario, at least through the end of June. Now, it's only on here about a 3% correction, so we're not looking for a bear market, but looking for a correction to occur here. The black line is the most bearish. That would be a Republican first elected, but there's not a lot of data there, so I don't really think it's as valid. But if that was the correct one, then it would look like we would have a correction of maybe 4%. So still, no matter, even if we take the most bearish case, we're looking at something like a 2 to 4% correction in the market, maybe 5%, but no big deal. Let's carry on. Our yield curve is still putting pressure on the market, just like that money supply was. The yield curve is also keeping a cap, not bearish, but keeping a cap on any bull moves. Asset allocation, who cares? It's drifting sideways. The stock market riskdicator is interesting. You can see what this is telling us is that market participants are running for shelter. They want to take less risk in the marketplace. And so that usually is bullish for things like consumer staples. That would be like Kraft, things that you've got to have, pharmaceuticals. It also means they like things like utilities. And guess what? Both of those sectors did nicely in the last week. Okay, global shares are much more bullish. I don't have a position here, but I wish I did. Our fully paid up members know I own a couple of different overseas stocks, and they're doing very, very well for us. But anyway, if you're not long, you got to be looking at global shares rather than U.S. shares. That's the place to be long. I've been talking about this for some time. Emerging markets, look at what happened here. We talked about those last week. Look at that big spike low that we made. On Wednesday, gap lower. Thursday, gap lower. On Friday, we gap higher. That's an island reversal, top and bottom, okay? And all on heavy volume. Okay, over here, T-notes. Big gap up, meaning lower interest rates on heavy volume. And I'm getting more and more bullish on this bond market and believe we're going to see lower interest rates, which will be bullish for the stock market. And this is going to be one of the surprises. Everybody's looking at Fed policy. Oh, they're going to raise interest rates. They're going to raise interest rates. And yet the bond market, the note market, is telling us, who cares? We're going higher. In other words, lower interest rates, higher bond prices. Now, if that's the case, look at gold as bond key factors. The green line is the 10-year Treasury. So that shows that interest rates are going lower. Now, right by that is the gold line, which is the price of gold. It's kind of saying we should see higher prices. The blue line's the most important one. That's the 10-year Treasury in Germany. It's saying sideways. And the one down at the bottom, the chart itself, that's the CRB, or commodity prices. Commodity prices tend to be a leading indicator for the bond market yields, and they're heading lower. Fully paid up members, I show them every week where the commodity markets are happening and where to put your money if you're a futures trader. And one of the things that came out that was shocking is that this week, the CRB, the Commodity Research Bureau chart, is heading lower, and that is bullish for bonds. Now, the dollar crapped out. Look at that thing. I'm drawing basically the same lines I did last week. Normally that would be a bullish formation. It'd be called a wedge formation, but instead the market broke through the bottom there and just collapsed. So the dollar, which I don't have a position in, as you know, I just don't like this market. I don't like being short, but obviously I can't get long. It's a bear market, so I'm standing aside. But if the dollar is weak, that means that gold should be strong, and sure enough, it did. I showed you that green line last week. I said I thought we'd see a bounce off that, and indeed we have. The market's now been up 2, 4, 6, 8 days in the last 10 days. That shows we've got a turnaround. We're heading back up to the old highs. I also don't recommend trading gold right now. I just don't see a big move. I love trading the big move because the big move is where the big money is. All right, here's our gold factors. Bullish on the top panel. Oh, guess what? All three are bullish. So you got to be... I don't have a good technical place to buy here, but nonetheless, well, there's an inside day on Friday. You could use that if you understand what an inside day is, but I have a bullish bias. I don't have a position. All right, oil creeping back up here. They came out, the Saudis and everybody, they say, oh, no, we're going to be good boys and we're going to actually follow the rules. We'll see. They never have in the past. All right, that's it for me this week here. Lots of exciting stuff going on. And hey, freebies, love having you here. Fully paid up members, we love you more. You're our favorite child. All right, fully paid up members, hang in there. We'll be right back with you.
Hey, Courtney Smith here, and I want to tell you about TradeSmith, our video weekly newsletter. Yeah, I've been bringing the hammer to the market for over 45 years, and now I share that expertise with you every week in a terse, to-the-point video newsletter. Now, see, back in the old days, I actually ran the #1 stock newsletter in the United States for 5 years, according to the Hulbert Financial Digest. I crushed the market. I went where the action was, and for 5 years, when I did this newsletter, it was the #1 rated most profitable newsletter there was. There's a picture of it. In addition, I also ran the #1 mutual fund, growth mutual fund in the United States. There it is. There's Morningstar. Look at that chart. Ooh, that's a beautiful looking chart there. And I was #1. Well, and no losing year in 40 years. I've been doing this for a long time, and I want to share that expertise with you so that you don't have to go through 40 years of experience. Trust me, I bled a lot in those 40 years, but what that means is I've led a lot, and I've shown tens of thousands of people how to make money in my career. Now, first of all, in this newsletter, we're going to cover the key markets. We're going to talk about the U.S. stock market. We're going to talk about global stock markets. We're going to talk about foreign exchange. We're going to talk about futures, yeah, even commodities, oil. We're going to talk about bonds so that this is a one-stop shop. You can come here. You don't need anything else. We're going to use options whenever we have the opportunity to leverage up and turbocharge our profits. We're going to do it. Now, this is totally unique analysis. You think that if I did what everybody else did, I would have those #1 track records? Of course not. What I have to do is unique. That's the only way you can beat the competition out there year after year after year. So, deep fundamental analysis. I'm going to talk about this on 2 levels. First of all, fundamental analysis of the market, monetary policy, economic policy, trade flows, all of those sorts of things, but on a very, very deep level. I've studied macroeconomics for decades now, and I've been using that analysis for decades. In addition, we look at deep fundamentals of individual stocks when we look at our stock market trades. That is to say, we're going to tear apart these companies. I focus a lot on a few key metrics. One of them, strong earnings growth. In the final analysis, that's the thing that really drives stock prices. Another factor that drives stock prices is when earnings per share estimates are going up. That is to say, when a broker changes their estimate from 10 cents a share to 20 cents a share, they call their clients buy the stock, and the price goes up. So those are the 2 most powerful techniques that affect the price of a stock. And I'm going to tear that apart and show you why I love these companies. But at the same time, just because it's a great company doesn't mean it's a great stock. We need to be able to time these things and buy them when it's good to buy and sell them when it's good to sell. So I'm going to show you unique technical analysis you can't get anyplace else. It's a combination of a number of indicators. Some of them you might have seen elsewhere, but I use them in a unique way. Others, you've never seen them anyplace else. I'm the inventor of those techniques. But you know what? Even the techniques that I use of other people, I use from people who are friends of mine. Yes, I've been around this market so long that most of the greatest technicians in history have been friends of mine. In addition, I'm going to show you ninja trading tactics. How are we going to get the best fill? How do we enter the orders? Are we going to use stop orders, or are we going to use limit orders or market orders? All of those sorts of things I'm going to give you in our weekly video newsletter. Key benefits of the newsletter. Number one, killer analysis that you're not going to find anyplace else. This is unique. This is unusual. And I have to make it unique. I have to make it unusual because that's the only way I can be number one. By the way, I was voted number one bond and gold market timer for 3 years in a row by Timers Digest. You can only do that when you have unique and killer analysis. Killer trades, because once we've got the analysis, we need to make money from it. We need to turn it into an actionable item, something that we can actually do in the real world. So I'm going to give you killer trades. I'm going to tell you specifically where to buy, specifically where to sell. Nothing is left to the imagination. I'm precise. It's also to the point. I don't want to waste time. I don't want to waste your time. I don't want to waste my time. So no BS, no stories, no jokes, no nothing. Right to the point. Here's what to do. Here's why to do it. And here's how to make money from it. So I'm going to keep it terse. It's about 20 minutes per week, right to the point with all the analysis. I show you the charts right on the screen so you know exactly why I'm doing it. You can double check my work. If I show you an indicator and I say this is what it means, I'll show you the recent past and you can see if it worked recently. Of course, it does. Now, actionable. That's a key thing. So many analysts out there, it's blah, 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 blah. It seems to me that all they want to do is they love the sound of their own voice. They want to sound smart. You know what? I don't care if I sound smart. That's not the point of the exercise. I'm not here to try to impress you. I'm here to help you make money. I'm doing all the same trades that I recommend to you. So trust me, they better be profitable. Easy. Like I say, I'm going to give you the exact entry, exit points. It's going to be super easy. Just type them into your brokerage platform, and there you go. It can't be any easier than that unless I came over to your house and typed in the orders myself. It's only $47 a month. This is a peanut for what you're getting. This is killer analysis, killer trades. This is something where, you got to stop and think of it this way. Can I make $47 more per month if I subscribe to this newsletter, or am I not going to make $47 per month? You know the answer. The answer is, of course, you're going to make at least 47, probably 10 times that, probably 100 times that, probably 1,000 times more than the $47, depending on the size of your account and if you follow all of my trades. So also, I want you to have a lot of free bonuses right up front. As soon as you sign up for the first month, I'm going to give you thousands of dollars of free bonuses. A lot of them are options related because I'm an owner of a company called Options University, and we've got some great education there, from option beginner to pro in just 4 nights. I like using options if I can because they can turbocharge the profitability. They can also be used to cut risk at the same time. That's a pretty awesome combination. So I'm going to give you from options beginner to pro in just 4 nights. Great introductory course for an option beginner. I'm going to give you how to quickly and easily master the top 20 technical indicators, some of which I use, but of course, as I say, I often use them in tricky new ways, and I'll show those to you as well. Retire rich with 10x income. I love this course. Really, isn't that what we all want, is to retire rich? And hey, why retire rich? How about retire rich and early with 10x income? This is an awesome course. You're going to love this course. It's going to get you focused so that you can retire rich. The secret is out with gamma trading. Now, this one's more advanced. I'm not kidding you with this. Gamma trading, I used to be an options market maker in the institutional world. I didn't deal with retail customers, only with banks. And what did we do? We did gamma trading all day long. It's something that's so super sophisticated that very few retail investors ever really understand it. This course gives you the insight into how to do this sophisticated technique. So we started from option beginner at our top bonus. This one, advanced and very super cool. Another one is, I love this. Come on. We're going to give you a new option strategy every month. So what's going to happen is you're going to receive a new option strategy every single month for 12 months, give you a month to master the strategy for the month, and then learn a new one, and then learn a new one. This is a great concept so that you can learn in a relaxed fashion. Gotta love it. I'm also going to give you 82-page manual on candlestick secrets. This is a particular style of trading, using instead of bar charts, using candlesticks. What's cool is it's got flashcards. It's really very cool because you actually get to learn just like you did when you were a kid. So it makes it super easy. You can be studying while you're sitting there on the subway or whatever, looking through those flashcards, the tutorials, the manual. It's awesome. And then finally, a very secretive part of the universe, foreign exchange options trading, where we combine foreign exchange trading with options trading, profiting from the two hottest markets. So I'm giving you 7 bonuses here. The value, if you were to go and buy those, go to optionsuniversity.com. Check them out. You'll see the price is just under $2,200. So when you sign up for just $47 a month, I'm going to give you these 7 bonuses right away. You're going to be able to access them right away. So let's repeat. You get the weekly video briefing with actionable advice. You get the 7 valuable bonuses, and all for just $1.56 a day. Come on. Really? You don't think it's worth less than $1.56 a day? Come on, man. You can't get a Starbucks coffee for $1.56, but you can get one of the best video newsletters ever. In fact, I believe it's the first video newsletter ever. But you're getting the same insights and the same techniques that I used to build that incredible track record of being the highest performing, most profitable newsletter for 5 straight years. All for $1.56 a day. This is a peanut. So what do you got to do? It's simple. You go to bit.ly/weekly market forecast, and yes, the W and the M and the F have to be capitalized, but go to bit.ly/weekly market forecast right now to subscribe, get involved, full money back guarantee, of course. Do it right now. You're going to really enjoy it. I'm not allowed to promise you that you'll make money. The SEC, the FTC, they'll come down on me like a ton of bricks. But I know what my track record is. I think as long as you follow the advice, I think you're going to be very happy. I'm allowed to say you're going to be happy. I'm not allowed to say you'll make money or they'll come down on me like a ton of bricks. We don't like that. So here's what I need you to do. Go to bit.ly/weekly market forecast with the capital W, M, and F right now. Go there right now. Check it out. Sign out. Full money back guarantee. Get all the bonuses. Try it for a month. I know you're going to love it. Thanks very much, and I'll see you on TradeSmith. Thanks very much. Bye-bye.